Maybe before we even get into the presentation, it's worth to go into some background on how this thing all started. All right? Let's take a step back from our life and think how do we spend most of our time? What are we selling our most important assets, which are our time, our brain, our family connections, and our friends? Or what are we selling all of this for? The way the world is constructed today, what we are selling all of this for is for what people call money. Doesn't matter if it's US dollars or euros or British pounds. Everybody is selling most of their time and expertise and brain power in exchange for these currencies. What very few people tend to take notice of is, wait a minute, I'm selling most of what I have to offer to the world in exchange for something that I have no control over. So if we just think of money like any other commodity, that it is scarce, everybody wants as much as they can get of it, and nobody can have enough of it. We realize that we're all competing, every person in the world is competing for the same thing that we don't control. Now that would be fair if nobody controlled it. But the sad fact is that there is a group of people that controls this commodity, and hence that group of people tends and can decide who gets how much, when, and what happens to the value of what we get. So that's the background we have to keep in mind throughout this presentation, because the real issue of this presentation is, how do we solve this problem? How does humanity solve the problem of being forced to work through a system that is not tailored for the people, but for a very small group of individuals controlling everybody else? So now let's get into the presentation. One way, and this is, we don't have the time here to get into this, but one way of the small group of people to control everybody else is to make the quantity of money either grow or decrease. When they feel like they increase the quantity of money, and what happens then? Prices go up. Prices of everything. Of food, of housing, of stock market, of the bond market, everything goes up. And when they choose, they decrease the quantity of money, and what happens then to prices is prices go down. But in the meantime, while prices went up, in order to afford it, the population went into debt. And when prices come down, the collateral of the person that took debt is worth less. The debt is worth more than the asset. And then what the bank can do is just take the asset from the person who took on the debt. So by moving the prices of things up and down, the small group can take more and more control of the assets of the world. Now think about it. The world is the same. The world has the same quantity of water, the same quantity of oil, the same quantity of gas, the same quantity of corn or agricultural commodities. So why does the world need to go through times of bad economy or good economy? We have been programmed to think that this is just a natural process of what they like to call the business cycle, and the economy is bad. But when you think about it, when people come in and tell you over the news and the media that the economy is bad, nothing in the physical world changed from yesterday. There's still the same amount of water, the same quantity of oil, same quantity of gas. What did change? The will of the small group of people for everybody else to have access to those commodities and to what the physical world has to offer. That is the only thing that changed. So, this system has been in place Well, the recent system actually for 300 years. But it's actually been in place for thousands and thousands of years. Small groups of people controlling the vast majority. Now, they have been doing that in different ways, sometimes through religion, other times through fear, and other times, like recently, through the financial system. So we were born into a world that is controlled by big banks that control the flow of dollars and euros and pounds. But the world wasn't always like this. What changed now is it's becoming harder and harder for the small group to control us. Why? Because we have more access to information. And the second reason is because we now have technology that allows us to fight back, that allows us to create our own economy. So now, after giving you this background, maybe we dive into recent events, the events of the last 10 years, and we see how this all relates. So in 2008, we had the stock market crash and the real estate crash in the United States. This evolved into a credit crunch, meaning banks didn't trust each other and reduced the quantity of money temporarily. In response to this, what central banks decided to do was significantly increase the quantity of money. Now, you would think that is probably a good thing, right? What could be wrong with increasing the quantity of money? Well, what can be wrong with it, and the things that are wrong and have been wrong for so long, have been able to survive because they are invisible. If everybody could see them, the system would have to change. The reason they are still wrong is because they are invisible. What I mean by that is, what's wrong with increasing the quantity of money is that it creates inflation. Inflation is like a hidden tax. The way this works is, let's say you work at a job and you earn $10,000 per month. And these $10,000 are part of a large pool of overall quantity of dollars that is existing in the world. And let's say this large pool of dollars is $1 billion. Then your 10,000 is a specific percentage out of that billion. Now what happens if the quantity of money increases from $1 billion to $2 billion? You still earn 10,000. Now that means that your buying power has been reduced by 50%. Because if before there was only $1 billion competing for all the assets that could be acquired for dollars, the price would be X. What happens to the price when there is $2 billion competing, when we increase the amount of dollars 100%, is the price would probably go up 100%. And if you're still making 10,000, that means you can only buy half of what you could have bought before the increase in the quantity of money. So, just here as an example, after 2008, the Federal Reserve, the Reserve Bank of the United States, increased the quantity of money by almost 6 times. On the eve of the crisis in 2008, there were only $800 billion in circulation. Today, 10 years after, there is 4.5 trillion. Now, let's stop a second and ask ourselves and each other. Did our salaries go up almost 6 times since 2008? If the answer is yes, then there's no problem. But if the answer is no, if our salaries only increased 3 times since 2008, then we actually have a big problem, because even though our salaries increased, we can buy much less with it. And I'll go even further. How many people can actually testify that their salaries increased threefold? For most of us, salaries increased maybe by 20, 30, or 50%. Which means we are much less competitive when we try to compete for assets. And it doesn't matter if it's to buy a house or to buy a car, or to get a degree and go to university. And what that leaves us with is only one solution. We have to borrow money to get what we want. And then we get into debt. And when we're in debt, if the quantity of money will decrease, if we'll get fired if we took a student loan, if there's a real estate crash and our house will be worthless, the bank will come and take the asset out of our hands. So, just to show some data, that we're not speaking only in the air here, look at the increase in the quantity of money by the three major central banks over the course of the last 10 years. So this is the Federal Reserve, the European Central Bank, and the Bank of Japan, the three major central banks in the Western world. Look what happened to the quantity of money. In 2008, on the eve of the crash, the three of them together were $4 trillion. Today, they are 15. Almost a 4 times increase. This has been the largest money printing in history. Now the result is, as I've explained before, A, simple people are drowning in debt. Governments are drowning in debt. We are drowning in debt. Corporations are drowning in debt. What this creates is a situation where the money itself that we use is toxic. The money itself, the US dollars, the euros, the pounds, are not healthy anymore. Another effect it creates is a bubble. Prices go up. Real estate, stocks, bonds, all go up. If in 2008 the problem was a problem for companies, now it became a problem of governments, because the governments bailed out the banks and the big financial institutions. And when a government has a problem, that means the people have a problem. Now the effect of all of this is more and more wealth is concentrated in less and less hands. 82% of the global wealth is concentrated in the hands of only 1% of the population. That means 1% of the population controls 82% of the resources. And the other 99% needs to fight for the remaining 18. That's why life is so hard. That's why we have to work such long hours. That's why both the husband and the wife, the father and the mother need to work. We lose time with our kids, we lose time with our friends, and in many cases we lose the opportunity to live honorable lives. This is just a demonstration of what happened to the value of the dollar since the Federal Reserve was created. Since we created central banks, $1 in 1913, the year the Federal Reserve was created, today is worth only 4 cents. That means what you could buy with 4 cents 100 years ago, today you need a whole dollar. That means most of the value in the dollar is gone. And like any fiat currency, any currency that is backed by nothing, like all the currencies that we have now in the world, eventually, and this has been proven many times during history, its value goes to zero. That's when the people stop believing in the value in this currency. This is happening now in Venezuela, for example. It has happened just recently in Zimbabwe, for example. And these were very, very, very rich countries just 30 years ago. And today, people who were billionaires there can't even buy 2 eggs with a billion of their local currency. This is a very interesting chart because what it actually shows is what happened to the economy since the crisis. GDP is a measure of economic production. You can see what happens to GDP since 2008 if we reduce the amount of debt. Without the money printing, the actual production declined severely since 2008. This is not a situation that can last for very long. Money, any currency, only has value as long as it backs a vibrant economy that produces. If the economy is not producing, like is shown here, then the money will not be worth anything. So far they've been able to cover it up because they printed so much money, people didn't notice that the economy is not producing anything. But this is a temporary solution. If the economy doesn't come back and starts producing, money will not be worth nothing. Not the US dollars, not the euros, not the British pounds. They're all connected now. So, another indication that our money isn't worth anything is, think about it. Think about 10 or 15 years ago. If you wanted to save money, what you do is you put your money in a bank, and a bank would pay you interest on it. You'll put $1,000 in a bank, and the bank would pay you 5 or 6 interest on your $1,000 because the bank wanted your money, because it can take that money, lend it out to somebody else, charge interest on that. And that's why they were willing to pay us interest to put money in their banks. But look what's happening now. Most of the world has negative interest rates. That means we have to pay them just to hold our money. What does that mean is, they don't want to hold our money for us anymore. And if the banks don't want to hold our money, it's because they know that money is not worth anything. So if they're telling us, if you want me to hold your money for you, you'll have to pay me for it, because it's taking space. I'm keeping something that is worth nothing to me, and I'm doing this as a service to you. So you have to pay me in the form of negative interest rate. What does that say about the value of what we're trying to deposit? Savers are losers. Our money is losing value. This is just another chart that demonstrates, so 2017 is in green, 2007 is in purple, and 1997 is in blue. Look at different sectors and how much more in debt they are. So non-financial corporations were 22 trillion in debt 20 years ago. It's 68. It's more than 3 times today. Government people. So the government had 19 trillion 20 years ago. It's 63 trillion. Again, we're more than 3 times today. The same for financial sectors and the same for households. This situation means money is being printed, it is losing value, and it's a matter of time before it goes to zero. Now, another word about money printing. It's not only that they print a lot of money, but what they do is it gives them to themselves, not to us. As we noticed before, our salaries didn't go up by 4 to 6 times during the course of the last 10 years. But why? If they printed 4 or 6 times more money, then our salaries, just by law of proportion, should have gone up by 4 or 6 times as well. The reason it hasn't is because they print the money, but give it to themselves first. What that means is the government gives it to itself and to the banks. And when you are the one that's getting the money first and get to spend it first, you're the one that's transferring value from the rest of the people to you, because you're spending money that hasn't been used before. I want you to remember this concept, spending something that has never been used before. If you're the first one, if the whole quantity of money in the world is 1,000, and you print a 1,000 and give it to yourself, and now you have half the money, you can buy almost everything that there is in the world with your 1,000. And the rest of the 1,000 is worth much less. So, just to sum up, we are working hard, selling our precious time, sweat, health in exchange for some of their currency. But that currency is losing value while prices are going up. What that pushes us to do is that we have to get into debt so we can afford things. Things get more expensive. We need to borrow to afford them. We get into debt, and then they have us because they own us when they provide us debt. If we can't pay them back, they can take the assets we do have to pay themselves back, and they can do that legally. So once we get into debt, they've got us. And the way money actually is printed is through debt, but this presentation is too short to get into that. So what does all of this mean at the end of the day? What this means is the world is a casino. It's just a large casino. And we are the gamblers. We're playing by the casino's rules. And like in any casino, the house always wins. The gamblers always lose. So who are the people, who is the small group of people that actually controls the financial system and hence controls the world? It's the governments, it's the banks, and it's the people who owns the banks and the governments. And it doesn't matter how talented you are, how hard you work, what are your principles, and even what is your salary. The system is built to work against you over time, and has been this way for a very, very long time. Now, if we examine the history of the world, every action creates a reaction. A process can take place for a long time, but then a reverse process takes place. And we are lucky enough to live in the times where the beginning of the reaction to the situation we just described is coming about. And that reaction, we're starting to see it in the form of cryptocurrencies. And in this presentation, we'll explain how. Before we get into how, let's understand what cryptocurrencies are. Essentially, cryptocurrencies are a code. It's a digital or visual currency designed to work as a medium of exchange. So we can exchange it between us, and on one side, on the other side, goods, resources, or services get exchanged. Okay? People use cryptography to secure and verify transactions, as well as to control the creation of units of a particular cryptocurrency. Now, this currency is different from the US dollars or the euros or the pounds in the way that it's not the government or a central bank that creates it. Actually, nobody creates it. Behind the scenes, there is different groups of developers, of techie guys that produce a new code and write a new system. But they don't own the network. They can't print more of it than the algorithm allows. And the algorithm was engineered to be fair. It can't be inflated by a decision of a government or a central bank. It can't create an inflation that wasn't predominantly pre-designed and pre-decided. So Aristotle had a definition for what is money. And he basically came up with 5 characteristics that money should have. The first one, it needs to be store of value. It can't be inflated, otherwise it's not a store of value anymore. If you inflate the currency, it loses value. If it loses value, it's not a store of value. It needs to be portable. That means it needs to be easily transferred from place to place or from person to person so you can transact with it easily. It needs to be divisible. That means a currency needs to be divided to smaller units so you can do transactions of different sizes and for different types of resources and goods. It needs to be durable. If you bury a stack of 1,000 pounds in your backyard, if you come back in a year, the paper has dissolved and it's not worth anything anymore. But if you bury gold in your backyard, you come back after a year, nothing changed, the gold is still gold. And the last thing, a currency needs to be fungible. That means one unit is exactly the same as the other unit. 2 ounces of gold are exactly identical. Now, before cryptocurrencies were invented, true money was only gold. And this is the reason why all central banks keep gold in their vaults because they know, they just don't want us to know, but they know that real money is only gold. But cryptocurrencies have one distinct advantage over even gold. They are much more portable. You can't send a gold coin from London to China within a couple of minutes. It would be very hard for you to move that gold coin anyway. But you can send a cryptocurrency from London to China within a few minutes over the internet. You can send cryptocurrencies back and forth from different sides of the world within seconds. This helps commerce and makes them much more portable than even gold. Now, without getting too much into the details, cryptocurrency is created via algorithm writing, which is based on mathematics. The reason mathematics is important is because it's fair. Mathematics doesn't distinguish if you're black or white, a man or a woman, and it doesn't discriminate by your sexual orientation, your color, your race, or anything else. It's the same with this. Cryptocurrencies don't care. As long as you hold them, as long as you've done what is needed to acquire them, they are yours. And you can do with them whatever you want. Now, the process of creating them is called cryptocurrency mining. This infrastructure is actually the most important part of any cryptocurrency network. Okay? The reason is the miners actually providing a bookkeeping service by which everybody can follow all the transactions on the network and verify them. Miners contribute computing power to solving complicated mathematical questions. When they solve it, they enter a draw and they win at a certain percentage and amount of coins. That's the incentive they have to get into the draw. Now, miners make profits by way of the more computing power they manage to accumulate, the more chances they have of solving the mathematical problem, and via that increasing the chances of getting the reward, the cryptocurrencies. The future of money. Most people are not aware of this, but many different things served as money through many different times in history. Cattle was money once. Shells were money once. Sticks were money in another time. Gold and silver were money. Today we have paper money printed by central banks, but that was not always the case. Each time in history had their own appropriate money. The money that fitted that time in history, according to the economics that were at that time. Now, for the Industrial Revolution, while the economy was an economy of commodities, gold and silver were the proper money. They were the proper money that was adjustable and compatible to the type of economy the world ran. When the world developed and printing presses were invented, paper money became the money because it was cheap to produce, it was backed by gold, and it was fitting for the creation of the financial system. Paper money was the money that fitted creating banks and stockbrokers and bonds. All of that is based on paper. And that's why our money today is paper money. But the world is changing. When you think about it, more and more parts of our lives are being transferred to the internet. The internet only came about 20 years ago. Before that it was barely used, and even then only by central intelligence agencies and governments and the army. It became the property of the mass population 20 years ago. And since then, gradually, but in an increasing pace, more and more parts of our lives is being transferred to the internet. Think about it. Internet of Things and artificial intelligence are already starting to dominate more and more aspects of our lives. Our communication transferred online to the smartphones. Our social life transferred online via Facebook, Twitter, Instagram, and the like. Our shopping transfers online. We shop much more on Amazon than in the shopping mall these days. That's why there are a lot of ghost shopping malls around. What didn't transfer online yet was our money. But that's next. We're gonna enter a world that the money will be fitting for the type of economy that we have. And when the type of economy that we have is the information technology economy, the money itself will also have to transfer online. Cryptocurrencies are the money of the internet, the money of the future. Now this makes perfect sense if you think about everything we discussed so far. So governments, which are old people, took on more and more debt, then printed more and more currency to pay themselves first, and by doing that they actually transferred the liability of paying that debt to future generations, to us. So what we said is, okay, got you, no thank you. We have to find a way not to pay back a debt that our parents and grandparents took on, because we don't want to be slaves to pay to finance their style of living. We want to have a good style of living ourselves. So we are finding ways not to use the old money by inventing new money, which is cryptocurrencies. Now notice, debt in the old money, US dollars, euros, Japanese yen, British pound, doesn't mean anything in our world and economy managed and run according to the new money in cryptocurrencies. If the world is run, if what people are willing to accept in return for their goods, services, work, time is cryptocurrencies, then debt that is dominated in dollars doesn't mean anything. It's worth zero. So that's our generations of saying, we're not going to take on your debt. Now, as time goes by, the old generation is dying and leaving the world, and more and more entrants of the young generation are coming about and getting into the working age. So the world currently is our world. Little by little, the old generation is fading, and the economy is our economy. So the economy of the future won't be run or accounted for with paper currency printed by a government. Because in the world of the internet, we don't need the government to tell us what is money. We can create our own money that we can agree upon, that we trust, and we're willing to exchange goods and services for. And that's why the future economy will be run and accounted for by a technological currency created by the people, not the government. Now the signs for this are already here. If we measure in US dollar terms, 2017 was a very good year for stock markets. The Dow Jones Industrial Average, for example, rose by 25% in dollar terms in 2017 alone. But if we measure it in cryptocurrencies, or in Bitcoin, the Dow Jones actually dropped by 91% in 2017. Now what the market is telling us is, hey, Dow Jones, shares, old money system, you're not worth as much in terms of the economy of the internet. You're worth much less. In our money, you're actually only worth 9% of what you are worth in the old world's money. Now, the way this happens is more and more assets are being transferred to the digital world and are represented in cryptos rather than fiat currencies. Fiat currencies is US dollars, British pounds, etc. And because of network effects, the more people adopt the cryptocurrencies, that's how their value goes up. Now, over the past 5 years, an investment portfolio with just 1% of Bitcoin in it beat the same investment portfolio that had no Bitcoin in it by 20%. Notice the difference between these two portfolios. Now the same investment portfolio with 5% Bitcoin in it and all the rest just stocks and bonds, like in this investment portfolio, this one beat the one without any Bitcoin by almost 100%. There's almost double the return here than there is here. The graphs here tell the story. This is the graph of the one with 5% Bitcoin. This is a graph of the one with 1% Bitcoin. And this is the graph of the one with no Bitcoin at all. Now I ask you, where do you want your money? What type of return do you want to see on your money? Now, we are not the only geniuses around. Institutional investors are the biggest sharks, and they notice this trend. And they are doing everything they need to do to enter the space. And what happens when they enter the space is vast amounts of US dollars, British pounds, euros, all the money that they control, and I remind you, they control most of it, would get into cryptocurrencies. So the way to create value, the way to become rich, is to get into something before the majority, before the big money. If you're into an asset, if you're positioned into an asset before the institutions are, before the big money is, that's how you become rich. Because the big money comes in after you and raises the price of what you have. So, when you have to make a decision today where to put your money, one thing is for sure. It's much more dangerous for your portfolio not to have cryptocurrencies in it than to have some. If you have some, okay, if you put 5% or 10% of your portfolio in cryptocurrencies and cryptocurrencies go down in value, okay, your 5 or 10% went down in value. But if you don't have anything, your graph is going to look like this. And this is on a very good year. On a bad year, it will look like this. And the people who put some cryptocurrencies will be here. And as you recall from the beginning of this conversation, if these people control more money, they can afford more than you can afford right here. So we're in the midst of the financial shift. Now, if we examine the financial history of the world, transition times, like the time that we are now, are the ones that created the biggest shifts in power, the biggest transfer of wealth, and the most rich people. Now, in today's terms, there are more than 350 trillion US dollars of assets in the world. Most of them will be transferred to the internet. Just doing simple math, what that means is that cryptocurrencies need to go up in value at least 1,000 times more than their value today, just to absorb this amount of money. That means the size of cryptocurrencies today is still gonna go up 1,000 times from here. By getting in early, we can position ourselves ahead of the curve before the big money comes in. And we are early. This is a graph that shows how the NASDAQ composite. NASDAQ is the stock exchange that controls most of it. Most of the technology listings are done on the NASDAQ. Now you can look here, 1975, 1980, 85, 1990, it went up quite a bit, but pretty mildly than what happened after. This is what happens between 1990 and 2000. Now, in all estimation, in cryptocurrency terms, we are here. We still have all of this to go. Most of the growth is still ahead of us. So now we understood all of this, okay, you must have a natural question. Okay, so what should I do? How should I get involved in this space? So this is the time to stop for a second and introduce who we are. We're a European cryptocurrency mining company. We operate mining farms in various locations in Europe. Now, we use our own developers that develop proprietary technology advantage that allow us to be more efficient than our counterparts or our competition. What that in turn allows us to do is to offer the best value on the market for our clients. Now, because of other fields of operations that we have, we created political and economic connections in some parts of the world that allow us to produce a very, very cheap operational package. That means our costs of running the operations are much lower than the competition. What that allows us to do is to provide very good value offer and very cheap prices to our customers at this point in time. Just to understand the type of things we offer to our customers, it is almost impossible to get in on a cryptocurrency mining operation. Today's mining environment, miners aren't offering participation units to clients almost and keep most of the production to themselves. What we are able to offer is a much cheaper offer than the competition. Our offer is at least 30% cheaper than anybody else. The reason we are able to do this is again because we managed to run the operation in very, very low cost terms. Now, contrary to the competition, we don't charge any ongoing fees. So apart from the fact that our prices are lower, we also don't charge you fees along the way. With our competition, you probably need to pay electricity fees, maintenance fees, etc. With us, you don't. You pay price day one and that's it. And from there, you just get your coins every month. Another big advantage that we offer is that we don't put a time limit in our contracts with you. So when you get into operations with us, you're in with us for life. We won't come to you at some point and say, sorry mate, you need to pay more if you want to continue. That's not something that we do, contrary to competition. Now, a word before I get to the next slide. Why would you want to own a mining production participation unit rather than just buy the coins on the market? The reason for that is, and I'll go back to the coins that you get to spend first. We are very early stage in the cryptocurrency space. What happens over time is there's a difference in value between coins that have been spent, that have moved them around, and coins that were new, that were just produced by the miner and delivered to you. You get to be like the government. You print the money and you use it first. That means the money in your hands is worth more than the money already existing in circulation. That's the main reason why you want to own participation units in a mining farm. There is another reason, and this other reason is, we mentioned that the large financial institutions are moving into the space. We have reason to believe that they're incentivized to move more into the newly created coins, like the coins you will produce in your mining farm, rather than coins that are already been circulating in the market. So, having said that, where you want to be is you want to produce your own coins, to have them pure, never used before, and sit on them until the price goes to where we are predicting it's gonna go. Now, coming back to our operation, we made sure that our interests are completely aligned with our clients. The number one value for our company is integrity. We want to make money alongside with you, not on your expense. That's why the price you pay for us in day one just finances setup and hardware. We don't have any profit built into it. We don't want to make profits in dollars. We don't want to make profits in euros. We want to make profits in cryptocurrency terms. So the way we make is we mine alongside you, we sit on our coins, and when the coins go up in value, we will all profit together. We don't charge you additional payments. when we don't want to profit in dollars or fiat currency. Now, before we ever sell our coins for anything else, we will come to you and give you a chance to sell before us. We'll tell you we're gonna sell for this price, and we're giving you 48 hours to sell before we do. The reason we do that is because we're a large operation, and a transaction that we do has the potential to move the market. We don't want you to be negatively affected by it. You can either tell us, look, I want to sell a portion of mine with you, and then we'll include the portion you want to sell in our sale process, and we'll sell your coins for you. Or you can tell us, I don't like your price, I want to sell it at market price, and you can sell it on the market within the 48 hours before we execute our own transaction. Another benefit you get from us is, when you get into business with us, you receive a right of first offer from us before any additional batch. Meaning, on top of the tag along that we give you, when we expand our operations, we'll come to you first and ask you if you want to expand and get more participation units. Only if you say no, we will sell those participation units to somebody else. So you have the option to keep your proportion of our mining operation forever. The choice will always be yours. So I've gone through the reasons we can offer low prices. I'll just go over this quickly. We have been working in Asia for a very long time, and we have contacts with the producers of the hardware. Plus, we purchase them in large quantities, so we get the hardware for relatively low prices. Now, we also operate businesses in distant jurisdictions that have very low energy costs. So our electricity prices are low, because we know how to deal with the local governments, the local authorities, to buy cheap electricity. Now, the recent decrease in prices on the cryptocurrencies opened the window to add more equipment. If prices rise, we'll be closing this batch, and we won't be offering it anymore. Another reason is, through our development process with our tech team, we developed proprietary software that allows us to increase the productivity of the hardware that we buy. Hence, we get more coins out of those hardware than our competition. And that's where we make our profit. Now, how does the process work? To be very honest, it only requires you to do two things. One is to sign the contract with us and transfer us the price of the participation unit. The second is to open your own digital wallet. We'll take care of everything from there. Once a month, we transfer your production, all your coins, to the address of your digital wallet, and then they are yours and under your control. I think we've gone through most of the value offer. I just want to mention here that we are diversified geographically, meaning if we'll have to transfer operations in the future, that will not hurt our production, because we are already set up and have the infrastructure in place to transfer our operations between different sites and even different countries without it affecting our production and with no time lags. So, what is the actual offer? This is a pre-sale. We are now expanding our farm by more than 10,000 mining units, out of which around 7,000 we are making available for the general public. We are doing a limited time offer of 25% discount to market price. Now, everybody that gets in at the best prices, has taken the farm for as long as it operates. There's no time limit. A right of first offer when other batches are opened, and a tag along with us whenever we sell our production. Now, we give you the option which coins to mine. You can mine Bitcoin, or you can mine Ethereum or other coins, or you can choose to mine both. So what do you need to do? Very simple. Decide how many units you want to purchase. Open an account with us by signing the purchase agreement and paying the purchase price. Open your own private secure digital wallet on My Ether wallet. And that's it. As we said, we will transfer your coins to you every month. And that's it. If you need any help from us, if you need for us to run you through the process, our help desk will be happy to do that and guide you through opening your own digital wallet on MyEther wallet or any other exchange that you choose. If you go to the appendix, you can have a look at a brief summary of what is Bitcoin and what is Ethereum. And if you have any questions, you can call the number on our website, which appears right here, and we'll happily answer all of your questions. Thank you very much. We'll cut and add numbers and etc. Okay?